Hi traders, and welcome to my video on the super arrows indicator. In this video I'm going to show you how you can use this strategy to capture moves such as this one for around 400 pips. So I'm using the MT4 trading platform here. This is an Australian dollar US dollar 1 hour chart. You can use any trading instrument that you want, from Forex, crypto, stocks, commodities, indices, etc. You can also use any chart time frame. I prefer the 1 hour charts, 4 hour, daily, weekly, monthly, simply because the higher chart time frames have more price data, which from my experience gives more reliable trading signals, and it also means less time chart watching, which is great. Okay, I'd much rather capture a big move like this one for around 400 pips than trying to fight for a few pips here and there all day long on the 5-minute chart time frame, not to mention the broker's spreads, commissions, and potential slippage that you're going to have to pay for throughout the day. Okay, so the super arrows indicator you can see is displaying arrows on my chart. Red arrows for down trades, green arrows for up trades. Just zoom in, you can see closely. Okay, so red arrow down, green arrow up, red arrow down. Okay, you can find this indicator probably somewhere online free for your platform, but I'll get into why I don't really think it's 100% necessary in a minute when you just follow the strategy and see. It's a repainting indicator, which for me is a downside immediately. I mean, if you go back historically, it's almost like it picks the ideal time to buy and to sell, but I'm pretty sure you'll find in real time that these signals are changing. For example, this green arrow here, it may have been here at one point. This red arrow here, it's like it's picked the top, but as the market was creeping up, it could have been here, then it could have been here and here. And, it can look good in hindsight. It looked like you've won the lottery, you've got a crystal ball here in front of you, and you're going to sell at the high and buy at the low every single time. It's not going to happen. Okay, it's a repainting indicator. It can be lagging. But, I'm going to show you a strategy which you can use, which can help to make up for some of the limitations of the super arrows indicator, okay? The indicator does combine various technical indicators into one to produce these signals, but technical indicators are lagging as well at times. They can they can change after the fact. They can be late to market changes, okay? Which is why I'm going to pinpoint what I think is most important, and that's price action. That being said, let's get started. So the first thing we do when we come to this point here on our chart, we'd mark the resistance level. Okay, we can see this resistance has been tested 1, 2, 3 times. It's a triple top pattern. In that instance, we're going to want to draw the support within the triple top. Okay, so there somewhere. We also have had this uptrend. Okay, so we're going to look for the reversal to the downside. You can see here a nice bull trap where basically the traders who had been going long here are taking profits up here, and there are traders still trying to get in on this trade, but they're late to the party, so they're buying here near the high. And that's when you get big candles like this. Okay, traders exit positions, stop losses are hit for those who are into buying at the high, and we get some downwards momentum. So that's the first signal of a turnaround. Then we have the lower highs. Don't need no fancy indicators to tell us that. We can use our eyes and see on the chart. You have candlestick patterns. You have a 3 inside down candlestick formation there. That's a bullish candle, followed by a bearish candle and another bearish candle that breaks below the low of the initial bullish candle there. So that's a nice breakout trade to the downside there. Okay. We also have a shorter term support level in here that actually becomes resistance. Okay, so could have traded on the breakout here, even could have traded to the pullback to resistance. Then we have this key level, which goes all the way as far back as here, if not further. You can see resistance, come support, breakout below this, come resistance again. Again, another 3 inside down pattern. Market is still making the lower highs, so all the indications are there for a sell trend to start. Okay, we haven't even touched on the super arrows yet, but this is where they can come into play. If you see a trend like this, so we know this is a downtrend forming here, yeah? We've gone through Y, got all our bearish indicators, which we've done through price action analysis, support resistance, trend lines, candlestick patterns. These are the most important things, in my opinion, a trader should know, not know hocus pocus indicators, but you do what works for you. So if somebody gun to head told me you're going to use the super arrows indicator, this is how I'd use it. I'd first determine the trend. So this is a downwards trend. I'm going to ignore any green arrows straight away. Okay. So these green arrows, wherever they appear, I'm going to ignore them because I'm looking at the overall picture. We're in a downtrend. Okay. So I'm only going to look at red arrows. And what I'm not going to do is I'm not going to sell as soon as I see a red arrow, because as I said, they can repaint. Like this red arrow looks perfect, looks like the perfect entry, but that red arrow could have been here, okay? This red arrow looks like a perfect entry. It could have been here originally, yeah? It could have been here. So what I'm going to do is I'm going to use the red arrow to say, once the red arrow is there and it stays there, I'm going to look at in a downtrend the support. Okay, so I'm going to mark my support level. I see a nice M pattern formation there and a breakout of that support level. In fact, if we look back here, that support level goes quite far back as well. Okay, so we know that's a strong support level. We have an M pattern formation and a breakout here. And that support then becomes resistance again. So it could have entered on this trend. Market's making its lower highs, lower lows, wedge pattern formation, breakout to the downside. In fact, this looks like a nice support level. I would have probably wanted to take this trade off of. Breakout below, place a stop loss just above the high. So you're looking around what, 10 pips, which is nothing really for a 1 hour chart. If we zoom out there, that entry there on that breakout, profit potential almost 350 pips with a 10 pip stop loss. You can afford to be wrong, you know, get a few losing trades with a stop loss that tight. If, and it's a big if, when you eventually catch a good trade or a good trend like this one, you maximize it. What I wouldn't do is say, okay, I've got a 10 pip stop loss here, so I'm going to have a 3-to-1 risk to reward ratio and exit the trade at 30 pips profit. Okay, so what do? You break out 30 pips profit here and you exit the position. Oh, fantastic, 30 pips. Not really. Look how much you've left on the table. I mean, you're just going to risk having to re-enter and potentially be wrong, pay more broker spreads, more commissions. When if you can get in a good position and maximize it as much as possible, you don't even need to be right all of the time, okay? So the trend is your friend. I like to cut my losing trade short, maximize winners. And in this instance, after this breakout, I'd move the stop loss to break even. And then I just place it above the highs all the way down. So there and there. After this price drop, stop loss will come around here, then here. Big price drop, stop loss just trailing on the highs as price goes down here, then here, then here, then here, then here. Probably stop loss will be around here. Wait and see what happens if we hadn't exited once we've seen this slowdown in momentum around here. But you can close part of the position on the way down, banking some profit. But what I wouldn't do is enter on this breakout here and then leave my stop loss there. Price turns back around, you've just left all of that profit potential on the table as well. So we got the super arrows saying it's down. If it stayed there, great. In real time, let's just say it stayed there, prices moved away. Okay, it's not going to repaint, price is going down. There's a ledge there, you can enter, breakout candle there, ledge there, massive breakout candle there. That is NFP, non-farmers payroll day, first Friday of the month. We can ride that momentum. Breakout, wait for the pullback and enter on the breakout. That support there you can see becomes resistance here. It's a strong level. Pullback, breakout. Okay, you can take these trades all the way down the trend. Market starts consolidating here. You're going to probably want to wait for more of a continuation of the trend. Okay, there is opportunity within there if you can be bothered to draw your lines. Support level there, tested numerous times, breakout. even pulls back to touch that for a cheeky entry there. Okay, and then here, you know, we don't want to risk selling too low, but we can see a nice level of support. We also have our wedge pattern formation here, breakout to the downside. There's ample opportunities to enter in on this trend. And one thing I've realized that I've just done is I've actually ignored the super arrows because, well, they weren't needed. I mean, we were just using price action. If the arrows happen to be agreeing with us, great, but we were just using our eyes and drawing our lines to see that. Anyway, that being said, if you insist on using it, as long as the last arrow was a red one, that would be my criteria for taking a sell trade. I'd ignore, as I said, green arrows in a downtrend. But if you see a red arrow and you really want to use the indicator, just draw your support and then wait for the breakout. So you can see there's no coincidence when you have these big candles on a breakout. See that big candle there, big candle there. Okay. Big candle there, big candle there, massive candle there, big candle there, big candle there, big candle there, big candle there. It's no coincidence you're seeing these big candles around support levels on a downtrend because traders have spotted the trend. They're not stupid. They know the market is falling down and they're selling on a breakout. Okay, so what would you rather do? Do you want to buy against them? Personally, I wouldn't. I'm going to trade with the trend and try and capture big moves. Once I'm in a good position, I'm going to milk it as much as possible. I mean, there's so many different trading instruments you can trade and time frames. I'm not sure why we'd, want to trade a choppy 5-minute chart all day long. Yeah, I mean, this move for 300 to 400 pips is in like less than a month, all of this with that profit potential. Even if you weren't right in at the beginning, there were ample opportunities to enter throughout. We didn't even get down to this point when there's still, there were still entries. If you want to draw your support line like there, you could have traded that breakout. Yeah, you could have drawn your support line like that and traded that breakout even up here. Okay, what you don't want to do is sell right at the bottom. But perhaps that's where maybe the super arrows indicator can come in handy if you just avoid selling when the last arrow was a green arrow. I mean, I give it credit as far as that. Let's see how it fared in this uptrend. So we had a nice uptrend here. So we had level of support formed here. Price started making higher lows. This is what basic stuff. I think too many traders just rely on wizard indicators that are going to give you 100% winning trades when all you really need is like good price action analysis and sensible money management and of course discipline, good emotions, no fear, greed, anger, okay, FOMO, etc. So here you can see you got diamond formation, uptrend, price breaks out, and again, is there any coincidence there's a big candle there? I don't think so. Traders are hopping in on this uptrend even from that level of resistance there. Tested, breakout, actually becomes support here. And to be fair to the super arrows indicator, it's shown a green arrow there, but as I said, we don't know if that's repainted. It could have been up here somewhere and got pushed all the way down. You would have been buying on the downtrend. So you can wait for confirmation, green arrow, continuation, and then just trade on the breakout there. Okay. Same again, green arrow. Can trade the breakout up here. 3 inside up, candlestick pattern there, bearish bar followed by a bullish one that's at least 50% of the bearish bar, then another bullish candle that breaks above the high of the initial bearish candle. Is a potential entry signal if you're trading candlestick patterns. You've also got a hammer as well. There's 3 white soldiers as well. Lots of bullish. There's a 3 inside up there as well. 3 inside up pattern there. There's a lot of bullish candlestick patterns. I've got loads of videos on candlestick patterns you can check out. Here as well, level of support has been formed. So the signs were there for a buy trade, regardless if that green arrow was there or not. It's not needed in my humble opinion, but you can use it as a gauge just to remind you that the market is moving up. Well, of course it is, because I can draw a line or just look at the chart and tell you the market's moving up. I wouldn't use these hours personally myself for entering and exiting trades because they repaint, especially if you don't know the underlying algorithm behind why these hours are appearing. What indicators is it using? Do you know? You should always know how or why you're taking a trade. Do you know what I mean? Not just hope that an indicator is magically going to get it right every time. That being said, there will be times when it is right, but then I can roll a dice and be right sometimes as well. So I don't think there's any shortcut. You know, we don't want to be lazy. We want to learn how to draw our trend lines, our support, our resistance, how to read candlestick patterns, which have been around forever. But I do understand some traders need technical indicators for guidance. If you're one of them, what's wrong with a good old moving average on your chart? Okay, I mean, price is above it, we're in an uptrend. If price is below it, we're in a downtrend. Okay, if you want it even more obvious, just change the period like that. There you go. Is that any better than this? Is this super arrows indicator any better than that? Maybe, but you could just use that as a trend, you know, as your trend line, and just trade pullbacks into that. Pullback, look for a breakout, enter. Pullback, look for a breakout, enter. Pullback, look for a breakout, enter. Okay, pullback, no breakout, price falls way behind, wait for the trend continuation, pullback, breakout, enter. Same on the downtrend, pullback. See, downtrend, pullback, breakout, enter. Downtrend, pullback, breakout, enter. I mean, it's not rocket science. You can trade if you want. You can trade how you want. You can trade in this if you want. If you prefer, you can trade that. Okay, now tell me, where'd you buy and where'd you sell? I mean, according to the super arrows, you'd be a millionaire if you if they were actually like this, picking the lows and the highs. But I can pretty much guarantee you in real time it's not going to do that. Okay, it's going to repaint. They're going to move. There's no shortcuts. Wait for a trend. This is what I would do. Do what you like. Wait for a trend and trade the trend. Look at that. That's more easier to trade, isn't it? We know we're going long because we're in an uptrend, so we just time our entry. We might be wrong. You know, you might buy at the high once, but let's say you bought here at the high, got caught in a bull trap, or you even sold here in a low and got caught in a bear trap. Doesn't matter. You catch one of these. If you take a 20 pip loss, another 20 pip loss, okay, 40 pips. But then you enter on this one and you make, I don't know, 340 pips. Take off your 40 pips you've lost and broker fees, you know, 300 pips up. Okay, just shows the importance of money management and trade timing. That's just my 2 cents. Okay, well, hopefully you found something useful in this video. I do appreciate you watching. If you can like and subscribe, that'd be great. Hopefully I'll catch you on the next one.